Hey everyone, in this video I'll answer which one I think is the better stock to buy today, Nvidia or Amazon. Of course, both of these companies are benefiting from the rising effectiveness of artificial intelligence, but Nvidia more so than Amazon. Now, there's more to a company than its position vis-a-vis artificial intelligence, but AI is the most popular investing trend in 2023 and in 2024. So a lot of investors are thinking about investments as it relates to artificial intelligence. Nevertheless, I'll look at a lot more factors in this video to compare these two AI stocks on and come up with the conclusion on which one I think is the better buy today.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So I'll start this comparison on revenue growth, and going back 10 years, you can see before the surge in AI, Nvidia and Amazon were growing relatively closely in terms of revenue growth quarterly. You can see in the purple and orange all the way up to late 2023. They were closely related, and then Nvidia absolutely exploded higher, 265% revenue growth in its latest quarter. Of course, this is unrealistically high. Nvidia may grow at this explosive rate for a couple more quarters, but it will come back down to reality, back down to normal growth rates as competitors launch their own AI chips and as the initial surge from enterprises acquiring Nvidia's GPUs kind of slows down a bit. Its growth rate will also slow down. Wall Street also is not expecting Nvidia to grow at this explosive rate for the long term. This is just a brief pop in terms of its revenue and profit and cash flow, and it will come back down. Still, it's going to grow nicely in my opinion, just not at these explosive rates. Amazon, meanwhile, will likely grow at double digits for a longer period, several years. It's got its foot in several categories that have a long runway for growth, massive market opportunities like e-commerce, cloud computing, advertising, and grocery, all with trillions of dollars of potential, except for the cloud computing segment, which is not yet in the trillions, but could get there in the next decade or so. Each of these two has excellent runway for growth ahead. The next thing I wanted to compare these two on is their operating profit margin, and you can see Nvidia with a huge advantage here, and it's been that way for the last decade, and I suspect it will continue to be this way for the next decade. That's because even though Amazon operates in these massive markets, these markets are not as lucrative as the market that Nvidia operates, and Nvidia's market generates higher profit margins, whereas Amazon, especially for e-commerce and grocery, these are low margin business segments where it's never gonna, I shouldn't say never, but it's not likely to achieve anything near double digits in operating profit margin. However, Amazon does have certain segments that are very lucrative, like advertising and the cloud services segment. Those two segments could achieve operating profitability north of or around 30%, but then its e-commerce and grocery business will bring down the operating margin of the business overall. So Amazon not likely to generate as high a profit margin of Nvidia, but Amazon will make that up because Amazon generates nearly 10 times as much revenue as Nvidia. So Amazon makes up for a smaller profit margin with larger revenue base. And so it's interesting to compare those two. Which would you rather have? A company with a much larger revenue base and a much smaller operating profit margin, or a company with a smaller revenue base and a much larger operating profit margin? That's an interesting comparison to consider. Now, one thing for sure I definitely love to have is a company that has rising operating profit margin that demonstrates economies in scale, and both Nvidia and Amazon demonstrate this. Nvidia to a larger degree here, with its operating profit margin rising from around 15% all the way up to 54% in the latest trailing 12-month period, and Amazon, which was close to flat in terms of operating profitability, now up to 6.41%. I wouldn't be surprised if this approaches 8% in the next few years, and I wouldn't be surprised if Nvidia's operating profit margin comes back down below 50% in the next 2 to 3 years. In the near term, it'll likely remain high as it is a clear market leader in AI, and competition is at least one, maybe two steps behind. But when competition ramps up, Nvidia's operating profitability will come down because it'll need to offer better prices. It'll need to work harder to secure sales. And so that'll work on profitability longer term. The next thing I wanted to compare these two on is cash flow from operations to sales, and similarly, Nvidia dominating Amazon in this metric, but you can see Amazon much better in terms of cash flow from operations to sales, whereas Nvidia decreases in this metric. So the lead narrows when you look at cash flow from operations. That's because Amazon has a larger degree of non-cash expense, things like depreciation and amortization for its warehouses, its logistics network, and all of that. When you exclude those non-cash expenses, Amazon's cash flow from operations is better than its operating profit margin. Now, looking forward, over the next 5 years, analysts on Wall Street expect Amazon to grow its earnings per share by 16% per year for the next 5 years. This is a consensus estimate from analysts that are following Amazon stock. For Nvidia, analysts on Wall Street expect it to grow its earnings per share at 37.89% for the next 5 years, a much more robust rate of increase for Nvidia compared to Amazon. Now, if we look at their return on invested capital, this measures how good a company is at taking investor capital and turning it into profits. And Nvidia in this metric has broken away from Amazon. They were much closer before Nvidia's recent surge, and now Nvidia has broken away. This too, like its operating profit margin, I mentioned it'll come back down longer term. This 74% return on invested capital is incredible. It's arguably unheard of for a company to generate this kind of ROIC for the longer term. So this will come down. Still, anything above 20% is really, really strong. And I think Nvidia will sustain that level for at least the next few years. So Nvidia really strong in terms of ROIC. Amazon solid as well, although you'd like to see Amazon move past the double-digit rates. The general rule of thumb here is you want to see a company have its return on invested capital be higher than its weighted average cost of capital. And with companies like Nvidia and Amazon, which have a higher cost of capital because of the capital intensity of the business, you want to have a higher return on invested capital. So still, Nvidia beating Amazon in this metric. And so far, from nearly all the metrics we looked at, Nvidia was ahead of Amazon, except for if I was to show you the total revenue, Amazon would be way ahead of Nvidia, the total revenue. Amazon is a much larger business in terms of revenue compared to Nvidia. However, when we look at things on a percentage basis, Nvidia shows its domination over Amazon. So let's look at valuation. Now, if we look at valuation, Amazon is trading more expensively than Nvidia. Amazon's trading at a forward price to earnings of 34, whereas Nvidia is trading at a forward price to earnings of 29.73. That's understandable, as Nvidia's stock price has absolutely soared in recent months and recent years, and that has some investors a little bit cautious about Nvidia because they're looking at it and saying, wow, that stock price has increased so much. It's scary to jump into a stock that's already increased so much. And therefore, investors are not giving that premium valuation to Nvidia stock because it's already increased so much. They're not looking at it in terms of, yeah, but the earnings per share has increased substantially. The cash flow has increased meaningfully. And over the next 5 years, the prospects look incredible. And so it's deserved that increase in price. So in this comparison, we saw Nvidia exceeding Amazon in a number of the critical metrics, and it's trading at a cheaper valuation. This decision is not relatively difficult for me. I would choose Nvidia over Amazon as the better stock to buy today. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.